Howdy, Jacob here. Today we're looking at VirTra, ticker symbol VTSI, in the aerospace and defense industry. Small company, 68 million market cap, 56 million enterprise value. The first thing I'd like to look at for smaller companies is insider ownership. And we see that they have 3.7% held by insiders. So not super huge for really small companies. I feel more comfortable as an investor if the board, CEO, CFO, management has a lot of shares themselves in the business to be confident that they'll do what's best for me as the shareholders. They themselves are heavy shareholders, but that's not an end all be all statistic. It's just one that I do prefer to be in the double digits, especially for a company this small. But again, not going to turn me off immediately. What's going to turn me on is going to be the revenue growth here. So this revenue growth has 0 years of the last 10 years of negative year-over-year revenue growth. Their slowest growth was 10 years ago, 0.4%, and they've grown as much as 34% in the most recent year. So very heavy growth in the last 3 years, but even prior to that, they were growing upper single digits for the late part of the 2010s. We see great return on invested capital, good return on asset, good return on equity. The thing I don't like is from 2014 till 2021, pretty much declining operating margin, but it is jumping up humongously the last year, 25% operating margin. But the gross margin has been going up. So again, we'll have to look at the income statement, see if that's R&D, see if the cash flow statement, if that was an acquisition or not. So let's look at that between, about 2019. Let's see what happened there. So 2018, 2019, they made an acquisition, and then 2019 and 2020 sold off, or that made an investment and then sold it off over the next 2 years. And so that's possibly something that was affecting their margins and the income statement in 2019. Okay, I don't really see any huge changes here in gross profit. So it doesn't look to be anything in particular, but still just interesting call out. So their R&D is going to be a little less than 10% of their revenue. So that's a pretty good amount, taking money away from today from the bottom line to hopefully make more in the future. Not all those bets are going to pay off, but the ones that do can be humongous, especially reinvesting at almost 10% into that R&D. There, that's pretty much all I got for income statement. Balance sheet shows 19 million cash and cash equivalents with no short-term debt, 8 million long-term debt. So it's great balance sheet. And the cash flow statement, not very consistent production of free cash flow. This is the only part I'm seeing of the business, or one of a few that doesn't look quite as good, but we do see 2 negative years of free cash flow in 21 and 22 most recently, and they did produce positive net income at those times. And it looks to be change in working capital is definitely the hindrance there. Definitely did some investing in property and plant, so that's partly the change in working capital. Okay, so feeling pretty good about the business in whole. I think we need to start making some assumptions here. So what did we see? I mean, they didn't consistently make free cash flow, but I guess we don't really see what they do with free cash flow since they haven't really consistently made it. But I think that's not enough to hinder me from making some making some assumptions here. So for revenue growth, still such a small company. What do they do? Provide use of force training and firearms training simulators for law enforcement, military, and commercial markets worldwide. Founded in 1993, still as small as they are, is very impressive. I feel like Axon is definitely the head honcho when it comes to military and more so just police, equipment and such. So if they can, put their foot in the door in that and produce better products, possibly cheaper, that could be massive, because I know Axon is a very large, yeah, $50 billion company producing 1.6 billion in revenue. So I mean, if they can get into that industry or take some market share from Axon, that could be huge. I don't know exactly if that's even true, but it seems to be like they do very similar things. Anyways, I think growth could easily be 7% from here. For margins, I'm going to go pretty close to what we're seeing on the average here. So let's do maybe 7 and 6%. Share change, they've been increasing shares quite a bit. Their stock-based compensation is relatively flat. Looks like they just issued a bit in 2021 to fund some things, but now that they're hopefully producing positive free cash flow for good now, maybe they'll just increase 1% a year from stock-based compensation. Um, Probably looking for roughly market average here. You could definitely debate that it should be higher. Definitely debate that these margins should be higher. Maybe I'll bump those up a little bit because they have been higher recently. And even still, we're saying it needs to fall 65% before you get the return to look for here. So I think, numbers are telling me it's a great company. I think, if you understand this business really well and you're confident in these margins sticking, you're confident in this growth rate of the last 3 years holding for at least 5 to 10 more years, this could definitely be a good investment. But based on my assumptions, which again, I tend to lean on the more conservative side, I want to buy a company when it's screaming at me. I don't just want to buy any old company. And so it's going to have me review less companies than the average individual, but um, I'm not going to waste my time in something that doesn't scream at me as a great deal. But very interesting company. A lot of good things from it, valuation wise, just not a price point for me at this point. Hope you enjoyed this video.